What's up, investors? It's the Russian dude. Let's immediately talk about one of the most recent jobs reports, why rate cuts might be postponed for quite some time, and which kind of the massive pivot the Federal Reserve is proposing. To begin with, right here you can see the graph which shows one of the most recent jobs reports, which is basically the job openings, and they are going down. At first, the traders, investors and the Wall Street were kinda happy to see it, because one of the main reasons for the Federal Reserve to start cutting rates was to see the job market to cool down. And a lot of traders, they indeed started to bet that these rate cuts will start coming in the near future, maybe even sooner than anticipated. Some people were expecting there will be a total of 2 rate cuts in these last remaining 6 months, and the first one will already happen in September. Both of them will be approximately 0.25%. But then another report came out, which is ISM PMI inflation, which basically showed it was equals to 53.8%, and everything above 50 means that there is an increase in economical activity, just in very basic understanding, which leads to also an increase in inflation. And this already is the last thing that the Federal Reserve wants to see in order for them to start cutting the rates, because, well, the inflation is not budging. And then this last Friday, another non-farm payroll report came out, which is basically the employment in the non-farm sector. And this one was, let's call it like this, a little bit devastating for the Federal Reserve. The expectations were 182,000, and it came at 272,000. Significantly many more jobs in this non-farm sector than it was expected. Once again, this employment, the jobs market started to go up significantly, which is one of the direct contributors to the inflation. Inflation goes up, Federal Reserve reduces the chances of cutting the rates. And the biggest hope for the Federal Reserve was that unemployment in America will increase. Previously it was at 3.9%, and well, the most recent statistic shows it to be at only 4%, which is the increase of 0.1%. Definitely not even close to be enough in order for the Federal Reserve to start reducing the rates. But primarily this huge increase of more than 90,000 non-farm payrolls from even the most conservative estimations, this is what truly shocked the markets last Friday, so much that even other alternative assets, such as for example Bitcoin, temporarily lost a lot of its value, as you can see from this graph. And guess what? Suddenly all these macroeconomic, financial, investing, trading experts all as one started to flip-flop. Some of them were literally last week saying that yes, there will be 2 rate hikes, economic is doing good, Federal Reserve has everything under the control, so yeah, we're gonna see at least a couple of rate cuts by the end of the year. The very same people now are saying that, well, it does not look like it's gonna happen. And some economical experts trying to make it look like that they are smart people. Now they publish completely different articles saying that, well, guys, you know, like, according to our estimations, according to our very thorough analysis, we do not think that the Federal Reserve will even decrease interest rates at all this year. But guys, you've been watching, at least some of you, my channel for quite some time, for several weeks already. You already know that I personally did not see many rate cuts this year. My personal best estimation was that there will be maybe maximum 1. And still, most likely, I was thinking that no, the economy is not yet ready for rate cuts. Most likely they're not gonna happen. And well, as you can see, just several weeks later, the Wall Street started to finally see the real situation. And one of the very first official statements from the Federal Reserve itself, its representative Neil Kashkari, he did say that, guys, it looks like that most likely the current rates will have to stay where they are for a much longer than anticipated period of time. He was just trying to be obviously very careful about what he's saying, because this is a pretty bearish for the market. This is not what traders and investors want to hear. But I mean, yes, I do not deny that there are some smart people on the Wall Street. What I just don't like is that they exaggerate sometimes, that they make simple things complicated. I mean, just think about it. Federal Reserve only needed just a very few things to see in order to start reducing the rates, which was obviously inflation, employment, and just in general the development of the economy. Neither of those things were demonstrating extraordinarily good results. That is why if you just keep it as simple as possible, you will be able to see weeks in advance that there is not that much possibility of the rate cuts. Well, now everything makes sense. Guys, if you've been watching my videos, you can already see that this was a pretty simple prediction. And as always, thank you so much for watching. If you found this informative and interesting, please subscribe to my channel, helps a lot, and see you tomorrow.